Just throwing in four quick things here, 3 or 4 quick things. These aren't pension things, these are just things that are kind of happening or have happened in the past few months that we thought we would finish off on, just to kind of give you maybe something a little bit more. So, the government announced last year this, what they called these pensioner bonds offered by National Savings, NS&I. Unfortunately, they said it would be launched in January, but they didn't tell anybody. And in fact, I think most of the industry believe they didn't tell anybody because they didn't want their website crashing when they launched it. So literally, we didn't get any notice, and then they launched it on the 15th of January. And what happened on the 15th of January? Their website crashed because loads of people visited it. Yeah. There is 10 billion available. At the moment, people are estimating that that 10 billion will run out by the end of January. So if you are 65 or over, or if you have relatives who are, if they're going to do something, they need to act quickly. The 1-year deal is 2.8% gross. The 3-year deal is 4% per annum gross. They are miles better than anything you'll find in the open market. Interest is taxable, paid net at 20%, and obviously if you're marginal rates, you pay more. Minimum 500 is the slight issue. The maximum you can put in is 10,000, but I guess if you bought both and you were husband and wife, that's 40,000 you've just squirreled away in something that's given you twice as much as the market practically. Yeah. The only thing, if I was being a slight cynic here about pre-electioneering, is it's rather interesting. If you look at the rate of return the government will give you on a 1-year gilt and a 3-year gilt, it is absolutely not even worth getting out of bed for. Yeah. So, will this be repeated? I would be very surprised. I would imagine this will be it and then we'll have the election. Yeah. But if you qualify, there is no doubt about it, it makes sense. And the only final thing to bear in mind is if you qualify or if you have relatives that qualify, they should also look at that Class 3A national insurance as well. If they've got a finite amount of money and they need to spend it on either one of these or that national insurance record, 5.8% annuity example would make me think long and hard about which one I go for, depending on health and all those other things we talked about. Okay. I've been calling it an ISA. I still keep calling it an ISA, but in fact I'm supposed to be calling it a NISA because that's the new name for it. The allowances went up significantly in the last budget, and again, if you think about this, 15,000 a year over 10 years, that's 150,000 invested. We already know what the increment amount is going to be for next year. We've got the junior ISAs as well. It is a really, really simple, easy way of squirreling money out of the taxman's grasp in terms of income tax and capital gains tax. And you know, many years ago I had a client who had religiously done PEPs and ISAs, and they built up £750,000 that was free of tax as capital or as income. It's not complicated, is it? It's not difficult, but it makes a real difference. And then yet another of these wonderful bits of news from what now became our friend George. On the 3rd of December, he announced that basically you will be able to inherit your spouse's NISA allowance. So in other words, if God forbid your spouse or civil partner passes away, you will be able to inherit the exact value that they had when they passed away as an additional ISA allowance that you can invest in your own name. Yeah. And that's quite useful actually, because what normally happens if someone's in a stocks and shares ISA, they pass away, the money sits there frozen whilst probate's sorted out, and then afterwards they say, would you like to hold this outside an ISA wrapper or do you want the cash? And what this allows you to do is they'll now give you the option, would you like to hold this inside an ISA wrapper? Yeah. So it is a very clever way of maintaining more money outside of the tax net. The only slight issue I've always had with ISAs is that they fall inside the inheritance tax net. But again, just a piece of information, and this isn't for everybody, this is only for people with a strong stomach towards risk, because this is very high risk. But remember, we have been able to access AIM investments in the alternative investment market, for some time now. And if you hold AIM securities for 2 years, they are completely free of inheritance tax because they form under the same legislation as if you own your own company, if you've got qualifying shares in your own company. Yeah? So in consequence, they are very high risk. They are certainly not for everybody, and they're certainly not mainstream. But if you have built up an ISA value, you can in theory transfer that ISA value into an AIM portfolio to remove it from the estate. One of the largest AIM managers that we use to run our money tell me that their average AIM portfolio lasts for 2 years and 9 months before the investor passes away. So maybe that gives you an indication as to the type of client this is attractive for. And the way we look at this, whenever we sit down with anybody and we're trying to express the level of risk that these things are involved, we normally say is if you lose less than 40% when you pass away and you've lived for 2 years, it was a good deal. If you make money, it's a bonus. But they are very high risk. And then, God, these are rather depressing things to finish on, but this is the last one, but a very relevant point. I don't know if you recall in the news recently, they announced that they were going to try and improve the diagnosis of dementia. Apparently about 850,000 people are diagnosed with dementia every year. Unfortunately, my mother-in-law has it. And it's awful because it took her years to be diagnosed, despite the fact everyone that was close to her recognised that there were issues. So this is a great scheme because I'm not sure I agree necessarily with doctors being paid a one-off bonus to diagnose it, but nevertheless I think something needed to be done so that dementia could be diagnosed earlier. It does, however, potentially present problems. Because if you are trying to plan away people's money, whether it be for inheritance tax planning reasons, with their full accord, it is difficult once they have been diagnosed as not having the mental capacity. And once the power of attorney is enacted, it is nigh on impossible. And that's because every time you might want to give money away or put it in trust to save inheritance tax, you have to go to the courts, which is a long and expensive process, and there is no guarantee that you'll be successful. So when we saw that, the only thing that occurred to us is you should try and sort out your wills and powers of attorney so that at least if, God forbid, you have a relative or you yourself are diagnosed with dementia, at least you've let everybody know what you want to happen to your money beforehand. Yeah. Thank you very much, because you all stayed awake, first of all, which is a miracle at these things. It's not the most gripping stuff in the world. That's me finished.